What's up, guys? Welcome to a very interesting This Week in Crypto that we'll be streaming for the next hour to talk about all sorts of anomalies and interesting patterns that you should be keeping an eye on along with our team here. There are obviously a lot of surges that have been going on, and it's been a mostly celebratory week for the crypto markets, but it hasn't come without um, some unexpected action, which is kind of the name of the game. As we've talked about many times, uh, prices tend to move in the direction of the crowd's least expectation. And right now, we've seen Bitcoin doing some very interesting things with not including, at least according to TradingView, this is why we had it in the title, there was a Bitcoin flash crash on the BTC/USD pair, which technically is something that is calculated by TradingView and not a true pair on Binance. So there is some grain of salt to be taken with this stat, but it dropped almost 9% out of the blue, getting to just above 40K, and then quickly recovering back to where it stands now at about 43.9. It's unclear. Oh, Ballers is saying my screen share is off. Let me fix that. No problem. That was because I restarted Chrome right before this stream started. Let me know if that shows up for you, Max, or anyone. I'll just keep talking in the meantime. So awesome. So we saw that interesting flash crash that is still showing up on TradingView. If you go to BTC USD on Binance, you'll see what we're seeing. In fact, let me see. I can probably just do it really quick on TradingView. Binance. Here we go. I'm just trying to zoom in a little more. If I can figure that out. It used to be, oh, here we go. We'll do 10 seconds. All right, you see this, guys? So this is a big drop all of a sudden on the BTC USD chart. And we're still trying to figure it out. The media hasn't really discussed it yet. Where I've seen a few mentions of it on Twitter/X, but for the most part, this is kind of being swept under the rug, and we're not quite sure what's going on here. This could have been some isolated drop just in terms of a dollar sale of some type in Bitcoin, but for now, we're just watching this. This is usually a sign of something that can come later that may be kind of big, or it may be nothing. We're certainly not going to predict anything, but without much of a source as to why this has happened, right now we're going to treat it as though it could be just a fluke on TradingView. So for those hoping for prices to come down to get a better buy market value, stay tuned, because that hasn't happened yet. It looked like there might be something here, and then all of a sudden it just quickly recovered. And on other exchanges, it isn't really showing up that way. But in the meantime, we can still look at the amount of positive growth that has happened over the past week. And there are a few assets that have stood out. Ordi/ordinals, these are technically separated as two different assets, but they're pretty much going up in unison here. They had big surges, and partly this was due to some airdrops that were happening. And they were certainly not the only altcoins that had huge weeks. We can see that WeMix is as an asset that has not really been in the top 100, has blasted up 62% and is now in the top 80 or so. Terra Classic, despite kind of flattening out in the last couple days, is still sitting at about plus 50% right now. Stacks, 47%. Cardano has been a big story as well, up 39%, and especially just in the last couple days has really made some huge ground. I can see as of right now, just in the past about 10 hours or so, it's up about 13%, while Bitcoin is only up about 1% for comparison, and most altcoins are kind of dancing above and below what Bitcoin is doing as usual. So Cardano is in real time right now having a bit of a decoupling that you may want to keep an eye on if you're looking for a long or a short opportunity. There's certainly volatility. And I should always mention on these calls that we aren't doing trading advice. That is not our goal here. We do not give investment solutions for you. We're simply giving you the statistics, and you can do what you want with them, but we'll certainly lead you to the well, if you will, so that you can find opportunities based on the ones that are sticking out in the news. Also on the social volume side, you can see Bitcoin is definitely being talked about a lot more now. We talked about last week where even though the prices were rising, Bitcoin's social volume had been dropping a bit and altcoins were a little more interesting to people. Not the case this week. You know, it zoomed past 40K, got all the way above 44 temporarily. It's on the verge of doing it once again. So it is getting a lot more attention now. Ethereum also up there at plus 19% compared to the week before in terms of social activity. It's pushing toward 2,400 now, and we'll see if it's going to hit that goal, and potentially 25, which would of course be a big psychological resistance level, where if it breaks that, then 3,000 becomes a lot more plausible. Solana here, huge discussion spike after a big week, especially just in the last couple of days. It had a big new token known as JTO. And you can see here on our social trends AI summary, it was released by the Solana-based crypto staking project Jito and has been trending recently. The token debuted at $1.20 and quickly rose in value with plans for listing on Coinbase and Binance. JTO is a governance token rewarding past users with airdrops, and its launch coincides with the rapid growth of the Solana ecosystem. So in short, I think that Solana is benefiting from its new, I guess you would call it, child token, JTO, which has launched with pretty good success. You know, people have been waiting a long time for a legitimate airdrop token that isn't a scam, and you know, we never know until the airdrop happens whether one is legit, but according to the crowd, at least, they believe it's legitimate, and that has enough power to boost prices for both JTO, of course, and Solana itself. And that's why they are the top two tokens in terms of trending rises right now in cryptocurrency. You can see below it, Ethereum also has had a huge surge just in the last 24 hours due to its price surge. You can see our AI summary says it surpassed 2353. That was a few hours ago. Now it's actually up to, at this time, 2363, and got up to about 2380 from what I saw just in the past hour. And then we have some other stuff about Elizabeth Warren expressing concern about the new threat of crypto. She's traditionally been against crypto, so that's not new news, but I believe she just made a new statement. Cardano, as I mentioned, is up here. And look at Bonk, too. Bonk has been on a huge run, gaining almost 1,000% in 1 month, attracting the profit-chasing meme coin crowd, and is currently hot on Solana. So another reason why Solana is getting a ton of increased attention at the moment. And this is also an airdrop. So we have two simultaneous airdrop, I guess, excitement trends going on between Bonk and JTO, and Solana's sort of the beneficiary stuck in the middle because it's on their platform. Also notice just the overall market cap in the last 7 days, according to our 2,700-ish assets that we track on Santiment. The overall market cap has gone up about 8.7%. Overall volume has gone up over 48%. These are huge numbers, guys. So as you would imagine, the FOMO is high, and we'll go over sentiment here in a moment, but you can just take a look at the extraordinary amount of green just looking at the price chart. If we go down the market cap list, everything appears to be in the green, and you can see Cardano, especially with this big exponential rise. Chainlink just in the last couple days had another big run. They're up to, it looks like $16.88 now. It got above 17 about 2 hours ago. If we look, let's just make these rows a little, actually, we'll just go to the next page. It's easier. Yeah, Litecoin's having a nice run here. Shiba, it's difficult to find projects that did not have good weeks. I guess Leo and OKB are a few examples of tokens that have fallen behind the rest of the markets. Aptos has had a huge run the last couple of days. Filecoin, it's pretty much across the board. So as you would imagine, MVRVs are very, very concerning at the moment. Lots of overbought and semi-overbought signals, which is pretty typical when you talk about bull runs that have lasted arguably about 2 months now, on and off. There have been a few pauses, but overall, the amount of average trading return gains have been significant to the point where, according to this model, mathematically, this is an anomaly now, which usually indicates that we're close to a top for several of these metrics, or several of these assets, excuse me. So this is essentially a midterm gauge looking at 30-day, 90-day, and 180-day average trading returns, blending them all together and saying, based on how rapidly prices are growing in traders' wallets, there's generally a cool down period that starts to happen around now. That said, it was saying similarly about a week ago, not quite this extreme, but it's something to be cautious of, because MVRVs always average out to zero over time. And anytime we've seen all of this red and orange across the board over our past few years of doing this, ever since the model came out, there is a correction of some type. Now, sometimes it could just be a flattening out period too. So you may expect that a sell-off is the right call now, wait for prices to drop 10 or even 20%, and that never happens. And instead, it just kind of goes like this for a little while, and then the pumps resume. So you need to be careful about being too aggressive if you want to, precisely use this kind of model to your advantage. There are multiple ways in which an MVRV can even out for assets, and it doesn't always have to be through a big, retrace and then suddenly it just bounces again. It's never that simple. But either way, probability states that the pumps will come to an end in the near future, assuming average trading returns keep going way ahead of what they're expected to be. Okay, and we'll look more into some specific MVRVs in a little bit. I want to look at Bitcoin's metrics now, and before we even get to the more utility type of assets, I want to start straight with the whales. So we can see, let me take off everything except Bitcoin, Tether, and USD Coin, which are typically the big three we like to check out. I guess my camera got a little blurry. Let me turn it off and on, give it a reset. While it's loading up again, take a look, there we go. Take a look at Bitcoin's 10 to 10,000 BTC wallet tier and how it's kind of recovered back to where we were in late October, which is a good sign. Okay, good to hear. Thank you, Max. Cursor's working okay. That's been an ongoing issue with our streams, but I'm glad that it is resolved. But look at since November 11th up until now, about 4 weeks have passed, and the supply held then was 66.5%. Now it's up to 66.84%. That 0.34% gain is actually pretty huge, and we can look at it in terms of absolute values. And this new yellow line I just made, if I drag holding shift over to the right, we can see that there has been an accumulation of 81,850 Bitcoin just in the past 4 weeks, which is a 0.63% rise in terms of all of their Bitcoin held. That is a massive amount, and something to be pretty excited about. So there is definitely some shark and whale confidence going on right now. That being said, in terms of supply held, it's still going down overall. It's tricky because the overall held with this line shows that sharks and whales have gotten richer mainly due to more supply going into wallets. And this is likely due to miners, and other coins that, aren't easily trackable. But clearly, the sharks and whales are getting richer in terms of the new supply that's coming into Bitcoin every day. But in terms of the percentage of supply, they're still going down, in the long term, that is. But short term, they're looking better. Now there's a second layer, and that is the stable coins, and they're not looking as good. We like to look at the wallets that hold between $100,000 to $10 million in stable coins as that sweet spot of traders that are generally pretty active and show how much buying power there really is at any given time to scoop up more and continue pushing Bitcoin's price up. So Tether has been on a plunge over the past 6 months. You can see at their peak that these sharks and whales held about 40.2%. They're now down all the way to 36.1%. So 6.1% less of the available Tether is being held by wallets that have between $100,000 to $10 million in them. USD coin not looking much better. At its peak, they had 39.9%. They're now down to 37.1. Not quite as big of a drop, but either way, you can see that this Bitcoin price surge has been partly due to apparently stable coins being exchanged for Bitcoin. When you look at the blue and red line representing USD coin and Tether and compare it to Bitcoin's absolute line here in yellow. So it's kind of a iffy thing to be excited about. It's more neutral than anything else because Bitcoin is still looking okay, but stable coins are concerning. They're typically, if we zoom out and look at like the last couple of years, you'll see that in most big bull runs that last a while, it's due to blue and red lines climbing for the long term. Look back in like March, for example, how Tether was really going up between December of last year up until June, and prices really were able to get some momentum. USD coin had some weirdness with its circle controversy, but eventually it started to recover and made up for lost time. And when these lines are going up together, it's a good sign, especially when it's going up with Bitcoin. And you can see for pretty much the past 2 years, Bitcoin's line has looked concerning. It was the worst here in December, but at least in the absolute line here, it's climbed up. The percentage of supply has been a little more dicey. All right, so that's a quick look at the whale outlook right now. If we look at the supply and exchanges, it's also seeing a bit of a turning point. You can see the trend just absolutely massively is pointing to Bitcoin moving into self-custody and away from exchanges. That's typically a good thing. We even talked about how at some point there may be so much Bitcoin moving to self-custody that it's hard for the top asset in crypto to continue circulating at the level that we need it to for prices to keep going up. But I don't think that's a serious concern right around the corner. For now, this trend of BTC moving into self-custody is generally a good thing because it implies there is less sell-off risk on exchanges. But just in the past week or so, if we zoom in, we'll just do the last 3-ish months or so. Between December 2nd and now, so the last 6 days, there has been a return of about 0.11% of the supply of Bitcoin going back to exchanges. So there are some people interested in selling off, and for all we know, they are doing so already. This is a 2% overall rise in terms of the supply and exchanges before versus supply and exchanges now. And you can also see, at least in terms of the overall amount of Tether and USD coin on exchanges, they've actually been moving up pretty nicely, which is a good thing because you want stable coins coming to exchanges for the purpose of buying crypto, buying Bitcoin, Ethereum, you know, Dogecoin, whatever it is they want to buy. More stable coins allow that to happen. So that's a positive sign that this rally can be sustained a little bit longer. So I like looking at both of these in tandem, both what sharks and whales are doing overall, and then how much of the coins are on or off of exchanges. Let's also take a look at the social dominance of Bitcoin, which has been quite interesting. We'll move those price candles in a little more. And it looks like the trend as of right now is more altcoin interest, less Bitcoin interest. Now, this is very volatile in terms of short-term, kind of a short-term perspective. So it might be better if we look at the daily, which does show that we just had this huge jump in Bitcoin dominance earlier in the week, and now it's plummeting again. And I would fathom that this is due to, you know, this being the point of 40K being crossed. And whenever we have that big psychological resistance level broken through, that's when, you know, Bitcoin starts being talked about a lot more again. Now that that's happened, and 50K is at least a little ways away in terms of percentage growth needed to get there, we can see that it's kind of dropped back down as interests have moved over to Chainlink and Cardano, Polkadot, even Pepe, all sorts of assets that have gotten a lot more interest. We talked about Solana and the two airdrop tokens. Those are all tokens that are pulling away the amount of interest percentage-wise that was on Bitcoin and over to them. So that's actually a bit of a sign of greed, and shows that traders are perhaps starting to look in the direction of more speculative assets, which traditionally happens when we're getting closer to a top. I can also simply use this same chart to look at the weighted sentiment. And what this metric does is look at the amount of discussion related to Bitcoin, just the overall sum of mentions of Bitcoin or BTC on Twitter/X and Discord and Reddit and 4chan. And it multiplies that by the ratio of positive comments versus negative comments. Sort of neutral comments are negated. And what we see is a pattern of indecisiveness. If we just zoom this out to a week, you can see that they were super positive about 2.5 weeks ago. Then it went super negative. Then it went super positive again, and now it's kind of neutral. So this, I think, back in late October and early November, really helped propel Bitcoin because there was so much FUD, and I guess you would call it uncertainty and doubt related to the asset. And typically when that happens, it allows prices to grow quicker because small traders are essentially selling off while large traders are growing, or large traders are accumulating those assets at a price that they think is still undervalued and can push prices forward. You can kind of see that too. If I just do this, I'm going to look at all of the tiers combined, and this is going to show me the overall amount of supply on Bitcoin. Confirm. I'm going to remove everything else. And then we're going to zoom out, we'll say 5 years. We'll even go longer. Let's go 10 years. All right, that's kind of an interesting perspective. So you can see this is the overall amount of Bitcoin addresses with at least a positive amount. So basically non-zero wallets. So whether the wallet exists, but it has no Bitcoin in it, that means it is not showing up here. But if the wallet exists and has at least a tiny fraction, that means it's an existing wallet. And you can see that it was rising sharply up until 2016, went a little less sharp up until 2020, and then got a little less sharp ever since. If we look at just the individual tiers, you can see there has been a recent rise just in the last couple of weeks, or I should say maybe 1 to 2 months for the tiny addresses. And then as we start to get bigger, just take these off. Now you can see they're a little more flat. When we start to look at shark and whale addresses, they're actually going down, or at least the 10 to 100 is. 100 to 1,000 is pretty flat. 1,000 to 10,000 is pretty flat. Maybe going up a little bit very recently, which is a good sign. And then now we're getting into exchange wallets, which are kind of all over the place, you can see. But the story is the amount of small addresses are really rising fast now, which is typically a sign of greed and a bit of FOMO going on, which shouldn't be surprising considering the price run we've been on. Certainly doesn't mean we're about to crash or anything, but it means that there's a higher likelihood of prices cooling down now because of the fact that so many small, some call them shrimp addresses, are just climbing in number so quickly. All right, so the other thing I want to show would be funding rate for Bitcoin. And you can see some weird anomalies here. Now, I looked into this. It looks like this big drop here and this big drop are due to the BUSD funding rate on Binance. And this could very well be related to that flash crash that's going on or happened briefly on TradingView, where it looks like there were a ton of shorts all of a sudden, maybe due to BUSD just getting more and more liquidated all the time, due to Binance no longer being involved with it. And it looks like the Binance funding rate for Tether is actually showing this big long candle, indicating there are a lot of people sort of opening those leveraged longs and betting on prices continuing to surge. So for me, I would be concerned by the fact that the main funding rate, the one that has the most power, is showing some longs that just started up in the last 8 to 12 hours. And everything else is kind of neutral here, but watch for that. I think some of the funding rate stuff between the longing on Binance funding rate for USD and the shorting for Binance funding rate for BUSD are something that might be causing some serious volatility coming up very soon. All right, let's go to a few of the utility metrics now, and then we're going to try to do an early look at some of the assets out there that have some strange price movement or just requests that you would like to have me further analyze. So beginning with transaction volume and trading volume, you can see we have this big trading volume spike here, but I'd be a little concerned about the fact that trading volume is moving down like this while prices are continuing to rise. It means that the amount of momentum related to all these trades are slowing down a bit. And then the transaction volume, we're still seeing pretty big numbers here. So I'm a little more optimistic about that, but even that has started to drop down just in the last couple of days. Looking at active addresses and circulation, not the best. It does look like it kind of hit its best point back on November 24th and is moving down a bit despite prices going up. And then circulation actually does look pretty good. If we look at our NVT model here, just circle over, check this out. So October ended up being semi-bearish according to this model, meaning there's at least an improvement in circulation compared to the current market cap. And then November actually got to neutral. For the first time, we've had neutral or better since going back to June of 2022, which was a big pivot point for crypto. And now, just in the first week of December, look at that, we're in semi-bullish territory. And that's a great sign that we're finally starting to see enough circulation to justify market caps being where they are right now. I'm pretty excited about the fact that the NVT model is finally showing that prices are looking better. Now, there have been fake outs before. We saw this long stretch of semi-bullishness here where prices were mostly dropping during that time. But more often than not, when you see these semi-bullish candles, prices are actually rising during it. And then they get, crashed and burned during the red moments. So it hasn't been the most accurate model over the past year and a half, I admit. I still do like it, though, because it's a representation of the trend of how many unique tokens are moving on and off any respective network during any given time while the market cap is where it is. And right now, the market cap is actually right on par with where circulation is for the first time in a long time. Looking at MVRV, as you would expect, average trading returns are quite high, not unreasonably high for Bitcoin. We're looking at about a plus, about a plus 11% for 30-day active addresses, which is definitely a riskier amount than average, but not unreasonable and indicative that prices are about to correct. However, the 365-day MVRV is pretty scary at plus 48%. That's one of the highest amounts we've seen in quite some time. If we zoom out here, just to give you an idea of how much of an anomaly it is, if we look at the last year, this peak here when it got up to 50% just 3 days ago, that's the highest it's been in well over a year, actually. And it's still pretty much right there. So long-term trading returns being this high is a caution flag because typically it has to come down in order for prices to continue going in the direction that they are. We talked about funding rate already. Whale transactions. This would be a concern. We just saw another big spike in whale transactions. You can see the last time we saw these 3 days of whale transaction spikes, it did create a temporary local top, but it didn't last long. We saw another one here, which, prices haven't really been too impacted by it. There was a small drop off that coincided with this spike in both 100K plus and $1 million plus whale transactions, but so far, no real long-term impact on price. I would still be concerned, though, anytime you see a huge jump in whale transactions that coincides with a big price rise. We already talked about the small, medium, and whale tiers. We'll look at the ratio of on-chain transaction volume and profit to loss in just a moment, but this is one of the biggest charts to pay attention to right now. This is the mean dollar invested age for Bitcoin. And right now, we're clearly seeing that the average age in which coins have been sitting on exchange in any wallet on the network has started to drop down during this big run, especially once things, we had this big surge in mid to late October, and then it froze for a moment and then continued upward. That was powered by the fact that a lot of dormant wallets right here were moving their tokens. And typically when that happens, it's a bull run validator. Not always super long term, but at least for the midterm, for the past 6 to 7 weeks, the mean dollar vested age line has looked really nice and been a primary reason why prices can continue to rise. Um, Even right now, over the past week, looking between December 1st and 8th, we were sitting at about 638.6 on an average day, and now it's down to 633.9. So the average days in which investments have sat in their wallets has moved down about 5 days. And if we zoom out the last 5-ish years, we'll just go down to 20, we'll do 7-ish years. Look at how prices have just absolutely exploded whenever there's been a downtrend in the mean dollar invested age. So back here in 2020 and 2021, that was a big thing. Even this short-term rally here in May to June, and then the big one from December 2016 through December 2017 or so. If I just highlight the price all the way to its peak in December 2017, yeah, Bitcoin went up 2,027% during that year. So we could be on the cusp of mean dollar invested age moving down, but I would not call this, one of these big drops just yet. We've seen fake outs before. This would be one of them, for example, and the very top, if I zoom in here just during the final month or so of the big 2021 bull run, you can see this big drop here where there was a little more push and it got to just below 69K. And then the mean dollar invested age started to go up and prices crashed really quickly. So we're on the brink of something that could be huge here with dormant coins being moved rapidly at the moment. But we need to see like a consistent downtrend in order to really say, all right, guys, grab your hats. It's time for what appears to be a bull run. And then we also saw network realized profit loss quite high, as you would imagine, over the past week. This is a sign that there is some profit taking going on. You can see on the 1 day, this was easily the highest, back on December 6th, the highest amount of realized profits that were happening in quite some time, one of the highest of the year. And that is where the top occurred. You can see a lot of these high spikes are exactly where the tops occurred. So when you're checking on Sandbase on a daily basis to see how healthy markets look and whether they can continue moving up, when you see a spike like this, it usually is a leading indicator that prices are about to top out. But this one was very temporary and we could resume a little bit longer. We're going to have to see here. We talked about supply and exchange. We talked about social dominance and weighted sentiment. All right, let's look at the ratio of profit to loss transactions, and then we're going to move into some questions. So check this out. Huge profit transactions compared to loss transactions that all happened this past week, especially on what appears to be the XRP network. And right below that is LTC. And then blue would be Bitcoin. And Bitcoin just had its highest week of profit taking. Let's go back a little bit. Let's look at the past year. Yeah, this was the highest week of profit taking in the past year. So that's concerning. Typically, there is a cool down period right after any of these big surges happen when there's a big Bitcoin profit take spike. So I'd be a little weary of that. That being said, we haven't really dropped down yet. So let's wait and see. Let's wait and see whether, maybe there's some loss transactions that could pile up, even if prices just retrace a tiny bit. If there's enough FOMO going on right now where people are buying at 44 or 43.8K, and then they sell at 42K, that could neutralize this profit loss ratio really quick. But I'd keep an eye on this chart. It's a really helpful one for swing traders. Okay, why don't we look at some altcoins now and take a few questions down?
I asked for requests, but we didn't get any up until now.
Totally fine. Yeah, I've got plenty I can share. Give me a moment. I'm gonna bring up a few of the big tweets that happened over the past week because we found some pretty interesting anomalies in the markets that we can share. I want to look at the Litecoin. Okay, one of our staff members just looked at Crypto Compare to identify that flash crash and figure out what happened. And Crypto Compare doesn't know anything about it either, which is fascinating to me. But in the meantime, take a look at Litecoin. This was posted a couple days ago, and it appears that there's just a huge drop in overall Litecoin wallets, which actually, believe it or not, would usually be a good thing because it means that mainly micro addresses are dropping off because maybe they're capitulating and getting a little bit too tired of Litecoin underperforming compared to the rest of the markets. It's down 55% compared to Bitcoin's price in the past 5 months, which is pretty significant. So looking at this, I'd actually be optimistic about Litecoin, which is actually on a decent run just in the last couple days since this was posted. It just surpassed $76 once again and is moving a bit ahead of the average altcoin. So that is nice to see. Let's see if we can get others. Oh yeah, check this out. So when looking at bull trap versus bear trap in the last couple days, we had a big, I got to go to shared access here, a big surge in bull trap mentions back on the 6th. And so far, those people who were concerned about a bull trap have actually been correct. And it mostly occurred just on Reddit alone. So Reddit had some sort of discussion about markets being in a bit of a bull trap. And at least for the time being, from the time they stated that versus the price now, you would have come out ahead if you got fearful and sold when Reddit was talking about markets being in a bull trap. This is usually, though, a bullish indicator because when sentiment gets very negative, like the keywords of bull and trap would be, that's a negative sentiment combination. That actually usually indicates that prices can continue resuming upward. If you see bear trap surging in number, that's when you want to potentially purchase more coin, or I'm sorry, you want to sell off more if people are calling it a bear trap, and you want to buy more if people are calling it a bull trap, because bull trap is a sign of doubt, bear trap is a sign of euphoria. But right now, bull trap seems to be the keyword that is most prevalent.
Brian, Alex mentioned in chat that you looked at funding rates for BTC, but he says that alt coins have funding rates going through the roof, and so maybe you could take a look at a couple of them.
Yeah, I can do that. So I've been looking at a few funding rate leaders lately, and Civic is one that has really been surging lately. So why don't we take a look at that? That's actually going to be more of an exciting topic right now. So Civic had this crazy jump up from late October until this November 17th, just a flash spike that happened. And if I go to funding rate, we look at Binance funding rate, we look at, just go to the last month. Okay, that is odd. Very odd. All right, something's weird about Civic then. I wonder if it's just permanently stuck on something very high and that's why it's showing a weird anomaly. Let's go down. Holo, Loop Ring, Scale are some other ones. If we take a look at that, okay, here we go. So we saw this huge surge in longing for Holo, also known as hot. And right after that, prices have gone down a little bit. So that would make sense. Typically, when you see these longs, that's when prices dropped. This was a great example back on November 12th and 13th, where prices really plummeted right afterwards. LRC, another one that's looking weird. Here we go, that's better. No, it doesn't really show anything too crazy. And then what was the last one? Scale. Check out Scale really quick. So Scale just went on a big run about 24 hours ago. And look at that. So Scale had this big shorting fest that went on after it surged. And those, for the most part, those shorts actually looked like they were rewarded quite handsomely. But more recently, yeah, there's definitely some longing going on once again, and people expecting Scale to continue moving up. It had been kind of crushed over the past few months compared to the rest of the markets. It also had this big RSI signal that we were talking about internally the last few days. So check that out. So our new RSI signal, which I definitely recommend you guys check out, it went super, super low. And right after that happened, prices did bounce. And now there's some longing going on the funding rate side. So it might be a very short bounce due to the fact that people are looking a little FOMO-ish for it and longing, which is typically a sign that prices are topping out. And for the person mentioning funding rate, please let me know if you have other assets that you're seeing surging. I can certainly pull up our funding rate model, but it may take a few minutes to load. I try not to have too many of these loading at the same time, or sand sheets get super weird. But yeah, we do see XRP with a huge one. It's going to do a refresh now. Let's look at XRP since I caught that in time. Oh yeah, so XRP on Binance is getting some major longs at the moment. We can see the last time we saw these longs were all around this top that happened in the first and second weeks of November. And now we're getting similar activity, which indicates that we need to be a little careful if you're investing in XRP right now, due to the fact that there are so many people expecting prices to continue rising up. Perhaps there's some optimism that it's going to go back up to $1 and beyond once again, but these aren't ideal conditions for it to happen because there are so many traders expecting it right now. So I'd be weary of that for sure. That is certainly a concern. Let's see if there's other ones popping up. Waves, Sandbox, these are relatively small assets. Internet Computer might be one we can look at really quick. And Chainlink, okay. So if we look at ICP, yep, same thing. Some big bars where people are longing it, trying to ride the wave upwards. And it has actually been going up a bit today, but I'd be concerned by the fact that there's so many people longing it. Looking at Link here. Another huge bar that just started. So I wouldn't be surprised if this halts Chainlink's momentum for the time being. We saw the last time it happened, this first big bar actually kind of occurred when there was a lot of volatility. It calmed down a little bit, and then we saw one more big local top that was halted by this big funding rate spike. So basically this means there's a lot more longs than shorts going on at any given time, meaning there isn't enough fear and a little too much greed toward that asset, which commonly leads to a price correction. So if history repeats itself, which it often does, that's why we value these kinds of metrics, that would indicate that Chainlink might be in a dicey spot for the short term. It could just be for a day or so, and then all of a sudden, you know, prices resume toward $20 again. So sounds good, Max. We can look at Curve. And we'll look at all of Curve. Doesn't look like there's a lot going on for the funding rate, maybe a little bit of a blip that went on earlier today, but that's calmed down. The price has been on a big run. So let's take a look at some of its overall metrics and see what might be standing out here to see whether the price momentum can continue. So in terms of volume, it doesn't look like there's anything special going on. We did have a bit of an uptick starting on December 4th, and it's kind of stayed in this range ever since. We'd like to see that volume is climbing as the price is climbing, as a good sign that it's being supported by more and more trading volume, but that isn't really quite happening yet. That being said, it's not super low either, so not the worst thing in the world. Transaction volume has gotten a tiny bit of momentum, but I'm not seeing too much to be excited about there. What is more exciting is the fact that the daily active addresses for Curve have ballooned. We got back up to 765 daily active addresses, despite the average being, I take it back, sorry, 932, despite the average being in the 700s. So the last couple days have definitely been nice. That said, we often see these individual daily active address spikes happen near a top, like we saw back here. I'd be a little bit weary about this, especially because circulation has really picked up too. December 7th was a huge day for Curve in terms of utility, so that might be related to profit taking, and we'll look at whether that is in just a moment. The 30-day Curve MVRV is up a little bit, getting close to a danger zone, which is typically around 15%, right about there. Anytime it gets above, that's usually close to when prices top out. As you can see, it kind of happened here. It definitely happened here. And we're approaching what could be a danger zone, especially because now we're seeing the 365-day MVRV looking well into the positive range, which has not been the case for Curve in quite some time. So both the 365 and 30-day MVRV are in the positive range. That's generally a caution flag that a pump may be coming to an end. Whale transactions quite high as well, so probably profit taking going on. And now let's take a look at it. So Curve's price is sitting at just below 69 cents. Typically with that kind of price, sharks and whales will start around the 100K to 1 million level and go up to maybe 100 million. These would be the three tiers to keep an eye on. They're certainly moving in different directions. I think in this case, we can just merge all three together to look at the 100K to 100 million tiers of Curve holders. Take these off, put on the price. Go to the last year. Okay. So we've had some interesting behavior. It certainly looks like these sharks and whales like to accumulate when bottoms are likely. You can see the big jump that started in late August, and then they quickly dumped here in mid-September, interestingly. But since early November, talking about a month ago, there has been a very mild accumulation, which does look good. It does indicate that the key stakeholders are hanging on and not showing serious aggressive signs of trying to sell off right now. So I like the look of this overall. It's a very small accumulation, mind you, but they're certainly not selling off as a result of this recent pump. So overall, sharks and whales do look pretty good here. Definitely some profit taking going on. The ratio of profit versus loss transactions does favor a lot of profit taking. Not a lot of dormant movement right now. As we saw with Bitcoin, it's starting to show some signs of these big drops going on, but not the case for Curve. Zoom in and look at the realized profits. It does look like there has been a little bit, but not too concerning historically. And supply and exchanges is moving down, which is a nice sign. Not a big move down. We saw the big jump that happened back in late July, where it went from 4.75 all the way up to 7.8 or so, and it's started to move down from there, but yeah, it's kind of just been pretty calm in terms of the supply and exchanges for Curve lately. Not a lot of discussion related to Curve despite this pump, which probably is because of the fact that so many other coins have been pumping at the same time that there's not enough focus on Curve uh, for what would normally be a pretty big pump that would catch people's eyes. So that's good because Curve is kind of pumping under the radar. You can see volatility really happens when there's a huge bottom signal for Curve lately, and that has not really, um, these kinds of spikes have not really been prevalent at all. Weighted sentiment also pretty neutral. That's a good sign too. A little concerning about the development activity kind of dropping off. I know some of you know more about the development situation related to Curve. Um, but yeah, this shows that there hasn't been much lately, and for the long term, you do want to see that assets are moving in the right direction in terms of development activity. We can look at the leaderboard really quick, and we'll give an update soon on our social media as well, which we're doing every 2 to 3 weeks lately. But yeah, Cardano, Polkadot, Kusama, they're the normal culprits that make up the top three. They're staying where they are for now. Hedera is up there in terms of development activity. Status up to the number 5 spot. Chainlink at number 6. That'll please the Link army. Internet Computer, Cosmos, Avalanche, Wrapped 9 Chronicles Gold. That's very interesting that they're suddenly in the top 10. I would love if any of you know exactly what's going on with the team there. I would love to know exactly why this coin has taken off in terms of development. And then Sui right below it. I haven't seen that in the top 12 before. Aptos is up there, Optimism, IOTA, Ethereum, Vega, Near. These are all coins that have pretty much consistently been in the top 20. But yeah, there's a few anomalies, especially Wrapped NCG. I'm very curious as to what's going on there, and seeing Status at number 5 is also pretty impressive. But yeah, we definitely recommend, filling your portfolio with assets that are at least showing positive signs of consistent development and preferably increasing development over time, because this is a signal that there's a dedicated team that is actively working on improving and innovating their coin for the long term to keep up with the technology and the advancements of the blockchain overall and cryptocurrencies in 2023. So yeah, I think that's a pretty good you know zoom in on what's going on with the markets as of late. And I appreciate all the great questions this week. I'm still going to look into what happened with this flash crash related to the BTC USD pair on Binance. I think that's a big deal. That could be related to BUSD and some of the funding rate shenanigans happening there. But we'll keep you posted if and when we find anything. And in the meantime, guys, I hope you have a great weekend. Congratulations for those of you who have been longing these markets and seeing some great profits that have been happening. And on behalf of the team, Maxim, who couldn't be here today, Max running the stream and rolling with the punches today, thank you guys as always. And we'll talk to you next week. Cheers.